I want to talk about the put spread versus the broken wing butterfly kind of put spread. Okay? And and so a number of you know that my favorite strategy is the put spread. We talk about it as the first strategy that we discuss in course one that everyone gets as a Dorian Trader member. We talk about the criteria of the put spread in course one, lesson three. And the reason why we started that way because the put spread is such a dynamic trade, but it's a basic trade. And what I mean by basic, it's just a put spread. It's two legs, right? A put spread represents two option legs, never less and never more. And the market has a tendency to drift up over time. And that's just the fact is, the S&P is significantly higher today than it was 20 years ago. And 20 years ago, it was significantly higher than it was, 20 years before prior. And that's the market has a tendency to drift up. And we have more up days than down days. It's not a significant difference. It's like 51 to 49, but we still have more up days than down days. So to use the put spread and have that fact in mind, and then put the put spread far away percentage wise from where the market is currently trading, right? You're doing it on an index because that removes all the different kind of individual stock risk, like earnings and financial issues or whatever the case may be with an individual stock. You just have broad market risk, which is less risk. You do that put spread on an index and it's far away from where it currently is at the market. You guys know here at the Dorian Trader we talk about ideally you want to be at least 7% away and better yet 10% or more away from at the money so that the market could go down and you can still win. You don't have to be right directionally to still win. Right? It's an amazing feeling to be wrong but still be right financially. Right? That's an amazing feeling. So what I mean by that is that if you're doing a put spread, I'm just picking anything right now for example purposes. Okay, so you're gonna pick anything for example purposes. It's not the criteria. Now you can see here on the TastyTrade platform that this is the at the money line here going across this horizontal line. Right, this is where the stock is currently trading at. And if you sold a put spread, someone's gonna give you some monies for this put spread here. And the only way you lose is that it has to be a big move, a huge move before you lose. And that's pretty powerful because it can go down and it can be anywhere between here, right? It can be anywhere between here and at expiration, you will still win, even though it went down and a put spread that you're selling is a bullish strategy. Having that flexibility in your trade is important because at best, you guys, over time, we're going to just be 50-50 in our directional biases, our directional, predictions. We're only going to be 50-50. So if we can strategically place our trade to give us a probabilistic edge, then we can learn to make money consistently by understanding those facts. If I was someone that used buying of a call spread to be bullish more often than selling of a put spread, then my probabilities will be at best 50-50, most of the time less than 50-50. I'm going to have to be right directionally if I did this trade. They're both bullish. That put spread I just showed you is bullish. This call spread that I'm showing you right now, it's bullish, but one has a super high probability. One I was just showing you that had an 80% chance of winning. This one right here has less than a 50% chance of winning. You need to be right directionally, and not only right directionally, you need it to go up in a big way for you to win. You have to supersede the premium that you paid for you to win at expiration. So the probability is not on your side when you're the buyer. You have to be right directionally. The glorious part of selling the put spread is that you can be, once again, wrong directionally and still win on the trade because you're going to have to be wrong in such a significant way for you to lose on the trade. At the Dorian Trader, this is why we love this put spread. And this is why this is my favorite trade strategy. If I can only do one strategy, then it would be this put spread. It's clear, it's precise, it's nothing fancy about it, but it works. Right? It works. With that said, you can also do what I call the broken wing butterfly put spread. It's not really called a put spread, right? I just throw that last part in and call it, it's really called a broken wing butterfly, right? A broken wing butterfly strategy. But I throw that last part in and say the broken wing butterfly put spread. And why I say that is that if you look at this put spread that we have on the board right now, and we go to this curve view, and you can see, I'm going to make this a little bigger so that we can all see it just a little bit and give it a second to populate. Okay, perfect. So this right here is the at the money line. This is what the stock is currently trading at. If it goes up, you're going to win 100% of the time on this trade. Okay? But what's more powerful, in my opinion, even if it goes down, even though this is a bullish strategy, you're still going to win 80+% of the time on this trade at expiration, right? Because you got this whole big win zone, and then your loss zone is here, right? But your loss is not all the way to zero. Your loss is defined because you have this put that you bought that creates that put spread, right? You're selling this one that gives you the credit, then you buy one a little cheaper than the credit you receive, and you still get overall credit, but your loss potential is defined based on this buying of this put, right? Buying of that put. The most you can make on this put spread is the credit that you received. So whatever that amount is, that's the most you can make on this put spread, but that's fine. You're trading unlimited upside for a higher probability of winning. And that's a trade-off that I'm going to make the super majority of the time is the probability edge. I want to have the probability. I want to be the casino. I want to be the insurance company. I want to have the odds on my side. This is how the put spread looks. This is the kind of dynamics of the put spread. Now, if we break this down and we talk about the broken wing butterfly in quotes put spread, it's going to be very similar, but it's a few differences that you might want to consider sometime doing the broken wing butterfly. So let's break this down. So let's just say I decided I was going to buy this here, and then I was going to sell this one, and then I was going to buy here, right? And I'm going to do two here because I'm going to turn it into a butterfly. So I'm selling two there. So in this example here, on the butterfly, this is a wing, this is the body, and this is a wing. You have a 1 or 2 point wide spread here. And normally, if it's a regular butterfly, then this leg and this middle part, this body, will also be 2 points wide. But in this example, it's broken. So we set it up for 10 points wide. You can set it up as wide as you want to be, but as long as it's not equal width between each legs, then it's a broken wing butterfly. You have the wings, and you have the body. And this is a broken wing butterfly. If you ever did one of those kind of elementary experiments of butterflies, and you get the caterpillars and you watch it transform, and they come they come out of their cocoon, and then in some of the butterflies, they come out perfect, right? They can fly great, and everything is awesome, right? Nature is played its intended purpose. But you also see, unfortunately, butterflies that come out of the cocoon and one of their wings are broken, and that's that's unfortunate. And so this is how the kind of name of the broken wing butterfly has come from, basically. And so you don't have the the symmetrical type of wings here, but this trade could be a very, very um, profitable trade, just like that put spread that we were just going over. So let me kind of compare it with the curve view here. Now, what I was saying earlier is that, let me try to make this a little bigger so you guys can see this a little better here. And that should work. All right. So what I was saying earlier is that the 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 at the money line was here. And if you were looking at that put spread, if it goes up, you were going to win 100% of the time. And that's the same with this broken wing butterfly put spread. If it goes up, you're going to win 100% of the time. In this example, if it goes down, you're still going to win 80+% of the time, right? You're still going to win 80+% of the time, but you can actually win more than the credit you received on this trade, right? So if it stays above your short leg, you're going to win in this example. And the way we set it up, when we just set it up, for example, you're going to win $71. But if it lands in between these two strikes here, the 520 and the 518, it's not a high probability, but if it does that, nevertheless, you can win another $200 because that's a bear. This is like a bear put spread here. It's like a bear put spread on this broken wing butterfly. And the way we have this set up, you can lose if it goes past the 518. A little past the 518, it has to go really, really more like past the 515 basically before you start losing because this bear put spread helps you. But if it goes down too much, then that's where you can have a potential, in this example, potential loss of 730. But the structure of this broken wing butterfly put spread allows you to have a built-in hedge, more of a built-in hedge than just a regular put spread, and it allows you to potentially make more than a put spread, and it widens your break even a little bit more than the traditional put spread. But it has more legs to this, right? It has more legs to this. So you technically have four legs on this one, right? Two for the body, one for a leg, a wing, and another for a wing. On the put spread, it's only two legs, right? It's no more, it's never less, it's never more, as I indicated earlier. But on this broken wing butterfly, it's four legs. Even though you're using the same strike here, this red one here, you're putting two here, but it's really four legs that you're structuring this trade with. So that makes it a little bit more complicated, but the dynamics could be a good trade to kind of supplement your put spreads from time to time.